All right, it is now 8 Central, 9 o'clock Eastern. Welcome to the live presentation. Excited to have all of you here. Thank you, Pam. Yeah, I love Lynn. She's awesome. So let's go ahead and start at the beginning. Everyone should see my screen, and I want to begin with this because this is the foundation of what we do here. This is the 4 stages of the stock cycle, and whether you're talking about Google or Netflix or Amazon or NVIDIA or Bob's Bait and Tackle, every stock is going to follow this exact same growth process, and they're going to go through these stages over and over and over again for the life of that company. And really, really important. And if you go back and look at a log scale chart of Amazon in the last 20 years, you'll see it went through this 3, 4, 5 times. It's going to continue doing so into the future. And what we need to understand, and please bury this into your brain, this is the absolute foundation of identifying when it's a good and bad time to buy a stock, are these 4 stages. Now, this is a weekly chart of Roku. We can look at different stocks in a minute. I'll show you the same thing over and over. And I've got 2 very simple moving averages drawn on here. A 50-day moving average in red, a 200-day moving average in white. And what moves stocks is not you and me and Claude and Jerry and Marcus and Jason and Kyle. If we all pooled all our resources and all piled into Apple at one time, we might move that stock, 10 cents, 5 cents, a penny, maybe. But if Goldman Sachs and Fidelity and Schwab and Warren Buffett and Bill Ackman and the Notre Dame Endowment Fund, if they all decide they want to buy Apple, guess what? They're putting in $100, $200 billion into that stock. They are going to move prices. So accept this fact number 1, institutions move stocks. Not you and me, not the kids on Reddit boards, not any of that stuff. It is the deepest pockets. I paused them, Steve. The deepest pockets are going to move stocks. And so whatever they are buying is going to go up. Whatever they're selling is going to go down. Period. Hard stop. And knowing that, we quickly realize that our job as investors is not to predict or interpret or forecast. Our job is simply to interpret. Figure out what the big guys are buying and what the big guys are selling. For the last 3 weeks, all the big houses have been selling Bitcoin. That is why it is going down. Despite my entire X feed being guys telling me how we're about to go to the moon, has done the exact opposite. And the playbook they follow, you can interpret that if you know what to look for in the chart. And this is how it goes through. So typically a stock is going to start out in stage 1. Now, this is a pretty short stage 1. This, just for the record, this was the COVID sell-off right here. So obviously that's going to throw a wrench in things. Without that big sell-off here, it would have been about a 1-year consolidation range. You see it there. And it just bounces between 120 and 150. Typically, stage 1 is like watching paint dry. Okay, the stock's not doing anything. It's bouncing around in a range. You'll hear it referred to as cheap or a value stock or whatever. It's just not a hot stock. And this is when the institutions begin accumulating. You see, they all work on formulas. They've got the equivalent of a massive Excel spreadsheet saying this company's going to earn this, they're going to grow at this rate, we think interest rates are going to be here, and sales and GDP and blah, 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 blah. And they put it all in this fancy formula, and it says, okay, based on all of our assumptions, we think Roku should be worth $500 a share. And so if it's trading at 80 or 100, they're going to buy the heck out of it. Now, once they begin accumulating, eventually the stock is going to emerge from this stage 1 base and enter stage 2. And this is where the party happens. This is where the fun is. Now, by the way, if you're new with us, we do these every single week. We also have another live members-only session every Thursday. We have a handful of indicators that we have made reserved for our members showing where the strength is in the market and a lot of other stuff. So if you're interested in joining us, we have a special YouTube deal. It's $5 for the entire year. Click the link below. No strings attached. $5 whole year. Feel free to join that. It's the best $5 you're ever going to spend, okay? So stage 2, this is the markup stage. Now, this is when a stock is a hot stock, a hot area. Maybe the company has explosive earnings and sales, like NVIDIA the last couple of years. Their sales are up 50% quarter over quarter. If you look back to Chipotle a decade ago, they're opening 50, 100 new restaurants a quarter. They're hot. It's a hot stock. They're doing something well, and the stock is in demand. Now, remember, the market is just an auction. It is buyers and sellers. If there's more demand, i.e. buyers than sellers, it's going to go up and vice versa. And so either the company's experiencing great growth, there's a hot story. This goes by even Crocs, the ridiculously ugly but comfortable shoes back in '08. I'll show you that one. But for whatever reason, stock is in demand and it's hot and it's rising. Now, in the markup phase, this is generally going to last 6 months, a year, a couple of years, right? There is consistent buying support, all right? And if you're a big institution, take Buffett, for example. When he had his guys start building their position in Apple stock, they don't just go hit, I want to buy 100 million shares market on E-Trade. There's not that much for sale. They have to buy day after day, week after week to build that position. And so it generally takes these big funds several weeks, if not a few months, to build up that position. And so in those situations, any 5 or 10 or 15% drop, they're going to take advantage of and buy. And so what that creates is the support. And you'll notice in stage 2 how the stock pretty much just rode this 50-day moving average up. There's no big 30, 40, 50% drops because it is consistently being bought. There's a great amount of demand. And so the stock is going to rise and rise and rise. In this case, it goes from about $150 to $500 over the course of about 7 months. Now, eventually, as we know, these parties all come to an end. Maybe the company's growth slowed, their sales are down. Maybe it just hit what the funds thought it was valued at. Maybe if it's Apple, maybe the iPhone started exploding in people's hands. Whatever reason, they won out. And there's a saying that says stocks take the stairs up and the elevator down. They just tend to drop faster than they rise. And so when these institutions begin getting out, that triggers stage 3, the distribution phase. Now, they carefully and tactfully get their way in. On the way out, they just dump it. All right, go watch The Big Short. You'll see how these decisions are made. And in stage 3, this is the institutions getting out. And you'll note stage 3 because you'll see the biggest drop you've seen since stage 2 began. This was a 15% drop this week, another 10% that week. And so here, Roku fell in a 2-week period, 30%. It went through the red 50-day moving average. It closed below it and stayed below. And it just gets really choppy and wild, right? A good uptrend is going to grind. When it starts whipping back and forth, that's how you know the big guys are exiting. And stage 3 is where most people get in trouble. 90% of retail traders can point their losses to buying in stage 3 because people mistake this as a buying opportunity. It is not a buying opportunity. It is the beginning of the end. And once these big institutions are out, once that consistent buying support that has been propelling the stock higher for months and months on end, once that's out of the way, now you just have retail investors. And we don't buy every day for 8 weeks straight. We buy once, maybe twice, we're out of cash. And so then it just becomes a game of uncle. And you hear these guys, the diamond hands, and they're holding, and this is when they just lose their shirt. And typically as a stock goes to the stage 4, the markdown phase, it capitulates. And typically, and go back and look at this, leading stocks will typically fall 50 to 80% in stage 4 downtrends. And I don't care what the company, go back and look at Apple, go back and look at Amazon, go back and look at any of the big, they've all had these 50 to 80% drop, Bitcoin as well. And then, of course, the stock is now cheap again. It goes back into stage 1. It's licking its wounds. Nobody wants it. It's going to bounce around in this area for 6 months, a year, 3 years until they get a new CEO that turns things around, or sales are rising again, or it's now a hot, whatever the reason, goes back into stage 2 and repeats this. And you're going to see this over and over and over again. And if we go back here and look at, I mentioned Crocs. We said I'm obsessed with Crocs. I don't know why. I think this was so funny. But go back and look at Crocs here. Now, this is when the stock initially IPO'd back in 2006. And I'll make this in candles. I know a lot of you guys like candles. And look at the action. Stage 1's really clear, just bouncing between 10 and 20 bucks for a year. Then boom, it starts to get legs. Now notice how, look at the volume. See the trading volume over here compared to the trading volume in here? See how much higher it is? It's because demand increased. These things are flying off the shelves. Everybody wants them. And so it's rising. Let me put the moving averages on here. Sorry. Make this easier to see. And so again, notice how here Crocs, and it went from $14 to $77 in a year, and it just rode along this 50-day moving average pretty much the whole time. And then what happened? Massive sell orders. Thing gets tanked. This is a weekly chart. In a single week, this stock fell 30%. Another 19% the next week. So here, the stock that's riding the 50-day moving average suddenly drops 50% in 2 weeks. It is over. Clear as day, they're dumping this stuff hand over fist. And of course, that was not a buying opportunity. It was not a dip. It came all the way down here to what did it go to? $2 a share. And then it goes back into stage 1 for a while, new stage 2, nice strong grind higher. Whoop, there's institutional selling, and it capitulates down in stage 4. It just goes over and over and over again for the life of this company. Whoops. This was stage 1. Again, this is COVID, this big dip here, right? Everything crashed. So typically it would have done that, but we get the same thing again. Nice stage 2 uptrend, breaks out, rides from 40 to 160, then gets whippy down to 50, up and down. You realize they're getting out, and it capitulates in stage 4, and it starts all over again. So this is the 4 stages of the stock cycle. Any questions about this? Really, really important we understand. Any questions? By the way, there should be a link below. I want to help you guys. We're on a mission to try to help 1 million investors. I can't do this any cheaper than $5. I'm not getting rich on $5 at a time. It's $5 for the entire year. Click the link below. Live sessions twice a week. We'll put some trade picks out once a month. They'll give you access to our proprietary indicators. You can keep track of the market. I can't do any. It's the best $5 you'll ever spend. All right. So click that link if you would. Join us. I'd love to have you on board. And if you're not happy, call me. I'll give you your $5 back, right? We're not too worried about that, okay? So that's the 4 stages of the stock cycle. And so it stands to reason we want to buy stocks in stage 2. We want to avoid or else get short stocks in stage 4. And you can buy in stage 1. It's going to be quiet for a while, but the bulk of your money, 90% of the dollars you make, even in your retirement account, are going to be in stocks during their stage 2 uptrend. And so this is where we want to focus, is in stocks on stage 2 and industries in stage 2, all right? So then how do we determine exactly where to buy? What if we missed this bottom here in August 2020 and it's running? How do we know when to get in? Well, to do that, you want to look for a very simple pattern. And this is going to be your bread and butter go-to breakout pattern, all right? And this is what it looks like. Now, this is OKLO stock, one we bought a couple of times. I've got a couple of buy points drawn here on the chart, but let me just show you how this happens, okay? Now, this is like a stock coming out of stage 1. You can see the same pattern at the highs, but here's what we get, all right? You're going to see the stock retreat. Well, I'll tell you what, let me just show you the one at the high. It'll be easier. There you go. That was 5 months of trading in rapid fire. Okay, so this is the kind of pattern you're going to get. Now, a stock in stage 2 is going up. All right, we'll talk about how to scoop them off the bottom in a minute. Yeah, we'll cover that as well, Vaji. But a stock in stage 2 is going up, right? Everyone wants to get stocks when they're cheap and when they're down. Forget that nonsense, okay? Don't be scared of stocks at their high. Stocks that are going to go double and triple and quadruple are going to make new high after new high after new high. So get that fear out of your head, all right? So first, the stock's going to make a big run up. Now, in this case, OKLO stock went up 170% in 30 days. A stock that goes up 170% in 30 days is being bought by big, heavy institutions. There's lots of demand, all right? No question about it. So you know it is a stock you want to focus on. Now, after it makes this big run up, it is eventually going to stall. And there's going to be profit taking, right? You've tripled your money in 30 days. You might want to sell some. I know I do. That selling is going to mean demand is greater than or supply is greater than demand momentarily, it's going to push the stock back. Now, remember what we said. If the stock is in stage 2, if it is being consistently and routinely purchased by these big institutions building positions, they are going to take advantage of these 10, 15, 20% drops, and they're going to buy it back up. Well, now you got a stock that went to 71, so went to 70 twice. Some people going, I missed my first chance, I want to get out. It pushes the stock down. Again, they're going to buy it back up. And these guys, don't put it past them. It's a dirty game. They'll run tricks. They'll put articles out in Market Watch and on Yahoo Finance about how the company's in trouble, it's overvalued. They'll have analysts write reports on making it a sell recommendation. Just ignore all of that noise, okay? The Goldman Sachs buy list. Goldman Sachs is not in the business of making you money unless you're a client. They're in the business of getting you out of that stock so they can buy it. So again, more little dip here, rises back up. And what you'll notice is it forms this shallowing pattern up here at the highs. And I call it shallowing because the drops get smaller. So in this case, it fell 32%. It runs back higher. It dips again, but not as deeply. Why? Why is this one only, well, it's about 27%. So close, not super shallow yet. But there's less sellers. There's less people getting out. They've already shaken out a bunch of them here. They've shaken out a bunch of them here. It runs back up. This little pullback's even shallower at about 16%. And what they're doing is what's happening is they're absorbing the supply. Remember, supply and demand. When you've got people that have doubled, tripled, whatever their money that want to get out, you got people who are weak-handed, you've got to get them out of the way. What you want is a situation where demand's high, supply's low. Everybody wants to buy it, but there's not that many shares out there to buy. That's what shoots prices up, whether we're talking about houses or cars or Beanie Babies. It's supply and demand. And so they're shaking out that supply. Then they're building up their position. And eventually, when they've bought up all the shares they can, they've got all the stock they can get at 60, 70, 80 bucks. Nobody else is willing to sell it. Then they have to say, well, would you take 85? Would you take 90? Would you take 95? Same amount of demand, same buying, but there's fewer sellers. Does that make sense to everybody? And look, there may be 10 million shares of this. Some of them are sitting in index funds. Some of them are sitting in 401k accounts. Some of them are in treasury accounts. Like, they're not all being offered for sale. And so when the float, meaning how many shares are currently offered, is low, it can then run. And so our goal is to buy right here as the stock emerges from this breakout pattern. Because that is when we know the stock has cleared that supply and it has the greatest chance of running and running fast. And so you see this kind of resistance. It couldn't get above. This one wasn't perfect, it's got to like 75 and kind of 80 and then the 80 and then, but as it breaks out, then the stock is free to run higher. And this one got a little whippy. It's come back down in here. But look what you had here. You bought this stock. You're up 68% in 11 days. You're up 130% in 30 days. So even if you got out over here or you sold some in here, like you made a big quick gain by being patient and waiting. That's a 55% gain in a week, folks. Even if you rode over to here, 70%. And so you'll see this typically over and over in that stage too. And I had another one marked over in here. This is where we initially bought it. Now, what was happening in February and March? Who can tell me? What caused the market and these leading stocks to get murdered? Now, look, OKLO was ripping. It went from $5 to 50 in 6 months, 1,000%. But then we got the tariff situation, right? We got the big sell-off. And when the president imposes 130% tariffs on all of our economic partners, guess what? The stock's going to come, everything's going to come down, especially the ones that are up 1,000% that year. And so you had this big liquidation. And so instead of getting in front of this and waiting or riding it down, you just wait for the exact same thing we look at from the highs. It must absorb that supply. The stock went from 60 to 20. Who's in charge? The buyers or the sellers? Sellers. Is there more demand or supply? Way more supply. Way more people are dumping than buying. And so you've got to get them out of the way until, like, Bitcoin is falling right now. It will keep falling until everyone who wants to sell has sold, until the last scared person dumps their coins, until demand rises above supply, until finally the buyers come in and overpower. And so that's what happened here. And it had, look at these drops. That was a 60% drop. No, thank you. Comes up, drops 45%. Then it comes in, and this little dip is just 18%. And then it drops just 9%. And then it rallies here to the high and only comes back 9, 10%. And it is shallowing, tightening up. And so when it emerges, whether you bought it here or right up in here, either way, that's where you get in to ride these explosive moves higher. And in this case, I'd say you would have sold it right here, but you're up 150% in a month and a half. All right? So this is going to be, we're trying to take it from top to bottom, right? Do we have a bull market? Yes, obviously. Do we have a stock or an industry in stage 2? Yep, nuclear is surging. This stock went from $5 to $50 here, okay? So we're just looking for these periods where supply and demand are working for our favor. When we have a moment, we come in with a scalpel and we buy this right as it emerging from this pattern, we can make a big and fast gain. And my only goal, and I'm not day trading, I'm also not looking for stocks I can hold for 20 years. I'm trying to make a 30, a 50, 100% gain over 2 to 8 weeks, get out, take my money and do it again. That's how you're going to compound your wealth. Don't get it twisted. The guys who have 200 and 300% years in their accounts didn't buy the only stock. They didn't just happen to pick the stocks that quadrupled that year. They made a nice win, rolled it into another, and they're doing it in a way that compounds their wealth. Okay? Now, I'm seeing some comments on OKL say, well, the stock's down. Well, yeah, of course it is now. I don't want to own it here. Is it currently in stage 2? No. It fell apart. But listen, if you buy and you get up 120% in 30 days and you ride that all the way down, we need to have another lesson. That's on when to sell. And I've got a whole video covering that. If you want to, there's things we look for, like when it makes a 3 times its average daily move, when you get an update on big volume. Hopefully some of you guys watch that video. If not, check it out for this. But one of the things we look for is when it goes up within 3 times its average daily range on high volume. That's a place you want to sell. Look up here. The stock typically moves about 11% a day. That day it went up 30. So you want to sell some there. It pulls back, natural reaction, begins to run higher. At this point, my stop loss is here. I have another final piece there on the breakdown. And so did I sell at the bottom and get the top? No, but I caught a nice little 50% move in just a couple of weeks. That's our goal. If you ever hear somebody telling you, I'm going to teach you how to buy, right here and sell right there, run like the wind. They are lying. No one does this. If they do, it's luck. But our goal is to catch the meat of that move. I'm not going to get the whole thing. I want to be in here. I want to be out here. I want to catch a nice quick burst and put those dollars in my pocket and move on. And then when I get a bear market, guess what I'm doing? I'm sitting in cash. I'm not buying anything. Questions about this? Now, listen, if y'all know people say, oh, these markets, it's a scam, it's all being manipulated, the whales are doing this, I would really encourage you not to let that mindset take over. It is just not the case. I've been doing this for 21 years. As a vice president of investment management with JP Morgan Chase, I've seen the inside and out. I've seen multi-billion-dollar buy orders. I know how this game works. Sure, the institutions are going to do what they can to manipulate prices to keep it low when they're trying to buy. To tell you that it's going to the moon when they want to sell, to create that supply, but it's not this giant rig system. It's just not. Why not puts on the way down? Absolutely, you can buy puts on the way down. But what I want you to take away from this is look for stocks or commodities, whatever, that are rising and uptrends. Wait for that price action to compress, to tighten in here. And then buy as it explodes. It's like a coil spring releasing its energy. And when you get the opposite, that's when you know you're in trouble. Okay? So let's look at Bitcoin. And this is a great example. Now, look at Bitcoin. I'll show you where I bought Bitcoin. Okay? Now, Bitcoin was in a nice, good uptrend. I bought it. I've been recommended to our members to buy it right here. Right there at 110,000 as it broke out. And you can see why. It rose in a strong uptrend. There's profit taking. It's coming in up, still getting deeper. And then look at this. Look how it tightens and tightens and tightens right around there. Okay. So we bought it there. And look, initially it did great. It came out, went up 10% in 5 days, thought perfect, like clockwork, doing as it should. And then it stalled. Now it gave one little pullback. Now I'll allow the first one. I'll allow this, what we call a retest, where it comes back to the initial breakout area. It bounces from there as it should. It made a new high. Okay, we're back in business, and then it fails. Now, this is not what a stock should do when it breaks out, right? Oh, I'll trade it later. I'm not going to own it long term. I'll trade Lego futures. I don't care. I'm just working the system. And so it comes down now, it breaks your level. And then it tries to get back again, and it can't achieve that big high, and it pulls back. This is breaking down. See how this was tightening over here? Now what's it doing? Now it's widening. It's getting more volatile. So we know this is not working. We're out of this stock. We got out at, I think, break even, like right over in here. We didn't lose anything. Didn't make anything either, but we didn't take a hit. Most people who bought at 110,000 are suffering big losses. And then it just kept getting worse. And so here it rips. Now, I had a friend who had, I think he bought 2 Bitcoin. He called me and said, Ross, I don't know what to do. I'm getting out. I said, yeah, I cashed this thing out over in here in a rally to 118,000. I can show you the tax. I said, I would take advantage of this. Now, you might think, why, Ross? Now it's going up higher. But it's widening. You see, this is distribution. This is institutions getting out of this. That's what causes these big, wild swings. A stock in a trend higher has shallow pullbacks, higher highs, higher lows, higher highs. This is lower low, lower low. And then it comes in here and breaks that low. And then it makes a lower high. And then it breaks that. And at this point, I said it's time to short Bitcoin. Now, I put an alert on. We told our members, see this alert right here, get short Bitcoin, 108,000. What I was trying to do was take advantage of and get short from this area right in here. See how this was resistance in May, resistance in June, resistance in July, then it broke through. Then it was support in August, support in September, support in September, October. So I thought, all right, we've broken down here. It's clearly a short. I'm going to let it pop to 108,000 and get short. And it went to 107.5. I missed it by 0.5% there, my short entry. I was trying to be tactical. But it has rolled over. Yeah, 78,000, I think, is where this thing's probably going. That's my downside target on Bitcoin. Why? Well, that's the last place it capitulated and found buyers. See over in here? See how it came down? Now look, this is where my target. If I'm short, I'm targeting. If I want to buy, I'd be looking at around 78, 80,000, but I wouldn't just buy because it hits a number. Here's how I do this. Notice what happened over here when it broke down. Now, this is not perfect, but it shares a lot of the same characteristics. Do you see how it's falling, falling, falling? It keeps going lower. Nope, even deeper. And then look how it formed this just nice little tightening pattern right here. See, for like 2 weeks, it tightened up. It began to hold. It broke through resistance. That's when you want to get in. And another big clue you're going to want to look at is volume. Okay, and I'll cover this really quickly, but just look at when it goes down, is it on high volume or low volume? When it goes up, is it on high volume or low volume? And over here, when it's falling, these big down days are taking place on above average volume. That's not, their sellers are still in charge. And then it comes in and look at this, these little pockets of low volume. It's dipping on low volume. It's rising on bigger volume. And it gets tighter and tighter, and this volume just pretty much dries up. That's your sign that the stock is becoming harder to buy. They've shaken the sellers out. They've absorbed the supply. And so then when it emerges, look at the volume spikes up here. You know you're onto something, and it runs from 80,000 to 112 in about a month. Love it, Dave. Now, if somebody asks how you short Bitcoin, well, this is the ticker. If you don't want to get into short selling, BITI. It is an inverse ETF. So what this does is every dollar you put into this is essentially a dollar you're short Bitcoin. And if we look at both of them here and compare the two. So notice how here, when Bitcoin is rising in blue, the short ETF is going down. Now we called the top over here, said it's going to capitulate. And what Dave did is bought BITI. This is getting confusing. Over in here, and look what it's done. It's rallied. It's up 25, 30%. So it's just this chart upside down. Is all it is. This making sense to everybody? Yes or no? And hit the heart if you would. Now, by the way, I mentioned this earlier, but I just want to keep harping on it. We want to help as many people as we can. I want to show people how the markets actually work, how to make sensible decisions, how to identify what to buy and sell. Hopefully you're realizing this is all common sense. We have a deal. It's $5 for the entire year. If you click that link below, it's just Trade Live with me or tradewithross.com. We'll get access to the live session. Do these every Monday. Yesterday we had an issue, so it's a Tuesday today, but every Monday we have another live session with our other analyst every Thursday. I'm going to give you access to our indicators. We put some trade picks out once or so a month to help you guys out. We have lots of material, access to our support team. It is $5 for the entire year. Best value you're ever going to get. So click that link. Join us now. Holden puts, Westinghouse, a good look. Okay, we'll look at some stocks here in just a moment, but I just want to make sure this is making sense to everybody. Now, we've been doing this for 30 minutes. How many indicators have I shown you? How many fancy proprietary red dot green? Nothing. You don't need all that. A couple of moving averages and volume is going to tell you everything you need to know. Let the chart do the speaking. Now, the big opportunities come when the chart says it's time to buy and the fundamental story says it's time to buy. There's a reason we printed money buying OKLO on these breakouts. There's a reason we made huge money in SMR, another nuclear stock, on a very similar breakout at a very similar time. And that is that one, the chart showed us when the right time to buy was. And then what's going on? We got an AI boom with an energy crisis. These guys are sucking more power than they need more power they can get out of the grid. Nuclear is a great way to do that. So Wall Street is betting on nuclear as a solution. So that's where the driver's coming from. And when you get the combination of a bull market, a leading group with a good fundamental story, and a clean breakout pattern, you've got the recipe to make a lot of money very, very quickly. And so, Pat, great question. How do we find these stocks? Let's cover that. Let's talk about where you need to focus your efforts. Okay, so this is the NASDAQ index. Now, it's pulled back the last couple of weeks, but big picture, are we in a bull market, yes or no? I think we'd all say yes, right? I mean, it's the index is up from April 50%. It's trending higher. If we put our moving averages on, they're still holding right there at that 50-day moving average. Okay, so we're in a good bull market. Great. So where do we focus? Now, there's over 8,000 publicly traded stocks out there. There's companies that make dental implants. There's semiconductor firms. There's power companies. There's restaurant groups, all this stuff. Trying to find the 10 or 20 stocks that are putting in this pattern, they're going to make a big move out of 8,000 is like finding a needle in a haystack, and you just don't need to do it. There's a much simpler way. And the way is you look at which groups, which areas of the markets are rising the fastest. Now, remember what we said in the beginning. Institutions drive stock prices. Whatever JP Morgan and Goldman and Buffett and the big hedge funds and endowment funds and pension funds, whatever they're buying is going to go up. Period. Even if they are all dead wrong, whatever they're buying that's going to fuel the market higher. And so if they are all buying nuclear stocks or crypto stocks or housing stocks, whatever it may be, if they're all buying those stocks, those groups, those areas of the markets are going to go up more than anything else. And so if we can track all these sectors and keep a pulse of which ones are rising fast, which ones are in play, we know exactly where to focus our efforts. Now, this is an indicator I call it an indicator, it's just a table, but it looks at 45 different sector ETFs, and it shows which one's up the most over the last 1 month and 2 months and 3 months and 6 months. And we can see where they're putting their dollars, because if Buffett and all the Wall Street boys are consistently buying nuclear stocks week after week and month after month, the nuclear space is going to rise more than the market. Now, when we looked at this table back in April and May, number one over 1 month was nuclear and nuclear and nuclear and nuclear. It was crypto and crypto and crypto at number 2. We had the quantum computing stocks all up here at the top. That's where they were buying, and that's where we focused our efforts. Now, the market is shifting a bit. The AI trade's getting a bit long in the tooth. NVIDIA's up 1,500% over the last 3 years. Heads up, buying a company that's valued at $5 trillion is not getting in early, okay? This sucker's not going to double this year. It just can't happen. The laws of physics won't allow it. So what theme are you seeing in these leading groups? Type your answer in there. Because make no mistake, every bull market has a theme to it. In the late 90s was the dot-com boom. It was Cisco and AOL, and all those stocks were leading the bull market. From 2009 to 2020, it was the big tech theme. It was the FANG stocks and Facebook and Amazon and Netflix. That was what was driving the market. There's always one or two leading groups powering the bull market. In 2020 and 2021, it was the work from home theme after COVID. That's why it was Teladoc and Carvana and Zoom and all those. And from 2023 to 2020 or 23 and 24, we all know the theme was AI. It was NVIDIA, it was Supermicro Computer and AMD and all those companies. Well, what we're seeing is a shift now. I'm seeing you guys put lithium and metals, energy and power, batteries. Yes, that's where the dollars are currently going. We have a big power shortage. Basically, we have all these massive data centers, like 7 football fields large apiece, full of these NVIDIA chips that are just sucking power out of the grid. To let you know the scale of how big it is, Amazon purchased 3 Mile Island, the big nuclear plant. They're getting it back online, and they're going to use every single megawatt of power that comes out. And so we're seeing massive and rapid deployment in energy because our needs are so high. And so lithium, yes, that's the battery tech to store the power. Natural gas, that's going to be the short-term solution to power these things until we get nuclear up and running. The entire energy sector. So out of 40 leading groups, 1, 2, 3 of them are all energy related. Lithium, solar, clean energy, EVs, which includes lithium, nuclear, solar, clean energy, solar, EVs, nuclear, lithium. You see the trend here? So the play is energy, plain and simple. I put a video out a couple days ago when I updated my retirement account holding, and I've got 25% of all my retirement dollars into the energy space for these reasons. Yeah, exactly. Somebody said, great, Amazon has a nuclear station. What could go wrong? Now, how to find a sector chart. This is something we include with our members. So if you are a member, just go to this link. I'll show you the page. If you're not, click that link, tradewithross.com. I mean, it's $5 for the entire year. We'll give you access to these, but here's the link. Now, all you do is, let's see if I can find it here. this is what the page looks like. So when you remember, you'll just go to this page. You'll put in your email address. You'll put in your TradingView username and hit submit. And we'll give you access to this. All right, so here's the page for all the members or anyone signing up today. Save this link. I'm going to shoot it here in the chat right now. I think I can anyway. Oh, come on. Well, let me paste it. Tyler, if you were John on here, would one of y'all paste that in there, please? Give him that link. Command C. Okay, doesn't seem to be working. My apologies. I don't know why I can't copy and paste that in there. But we'll put that in there for you. So again, the link is below. It's tradewithross.com. It's $5 for the entire year. I'll give you access to this. But when you add it, then it's just called TA Industry Strength. So you go to indicators, put in TA Industry Strength. See, it's got a lock on it. That's because we just keep it for our members, but just tack it on. It's going to pop up there on the chart, and you can adjust your settings to however you want it. When you've been able to access them, I got it fixed, Rich. We're good now. Yeah, click that link, and we'll send that to you. I know it's Command V. I mean, I'm putting it in there. Let me see if I can just not let me type it in. There it is. Okay, sorry about that. There's the link. Click that Google Doc link and put your info in there, and we'll give you access to that indicator. But so that now we know where to focus. We're focusing on. I mean, the overall theme here is clean energy. Whether it's solar, whether it's nuclear, whether it's lithium and battery tech, it's all clean energy. Okay, so knowing that, do we need to sort through all 8,000 stocks? No. We just need to look through the clean energy stocks. And I've got a list here called Clean Energy with about 20 or 30 stocks in here. And it's pretty easy to build one of these lists on your own. All you do, here's a simple tool to do it. Watch this. We use a fancy tool called Google. So whatever your theme is, put clean energy and put in ETF, exchange traded fund. Okay, and you want to find a big clean energy ETF. The one I'm looking at is ICLN, iClean. Goodness, there it is right there. But any of them are going to be the same thing. And all of these ETFs is an exchange traded fund. They just hold a basket of stocks in a given industry or sector. Most report their holdings publicly. So go over to holdings. Boom, that's all the stocks they own. Bloom Energy, First Solar, Next Power, Vesta Winds. Some of these are Chinese stocks. Just ignore that nonsense. BE, First Solar, NXT. Okay, so you're just going to come in, make you a list, and start putting these in. All right. And so that's what we've got here. And so then we're just going to run through this list and see which one of them look like they want to go. Now, does Array Technologies look good? Not to me. It started to. It started to come in here and tighten up and shallow, and now it's kind of breaking down. So it's not an ideal pattern for me. BLDP. Now, this would have been one I'd buy. Now, you can see the breakout that took place over here. And this is just a few weeks ago, all right? So you can spot these in real time. And this was rising. In fact, it had doubled over the last few months. It comes in, it begins to shallow and tighten up right there. Clear as day. There's your breakout. You buy it at $2, $2.20 a share. Boom. You double your money in a month. Just like that, all right? Now, it started to set up again because typically it's going to go through this pattern over and over. It's going to make a big run. It's going to digest that move, compress, absorb the supply, set up and go again. And it started to. Okay, it's coming in here. I'd be looking to buy it on a break above 375, but it didn't break. It rolled over, so it's just not ready. Maybe the big bull market's over. I doubt it, but who knows? But it doesn't matter. I'm not going to buy it until it breaks out. Bloom Energy, still kind of whippy. You might be able to buy this one in here. CSIQ, that's holding up pretty well. Canadian Solar. Now you could buy it here and just play on the strength. In an ideal world, what I'd like to see, after a stock is just, doubled in a couple of weeks, I want to see that supply get out of the way. I want to wait till I have a precision entry. And so, okay, it's come in, it's pulled back, it's bounced right back up and coming in. So I'd love to see it just kind of tighten up here and absorb. And if it does that, I'll absolutely buy the next break higher. Same thing with First Solar. Now, in phase. Now, look, we were looking for this one to break out. And I drew this a couple of weeks ago. Did it break out? No. Did I buy it? No. Am I getting my shirt handed to me because I'm just, no. We need the confirmation. That's the beauty of this. We need to see it, clear its supply to buy it. Now, Solar Edge is getting whippy here, but you can see the big breakout pattern here. Now, remember the stages of the stock cycle. Look at Solar Edge. This plays out really clear. So this big stage 1 over in here for several years, it goes into stage 2, which is this beautiful run up. Then it starts getting whippy. That's institutions getting out. This took a really long time, and then it went into stage 4 and capitulated. It's back into stage 1. And so big picture, if I wanted to risk, 15, 20, or 25%, it's now coming through stage 1. It should be entering a new stage 2, and I'm looking for the stock from 30 to 80 or 100, maybe back to 300 or 400 like it was a couple of years ago. So big picture, I'm bullish on Solar Edge. Let's look at Aura. Aura is ripping. Someone forgot to tell this stock the market was pulling back. Now, do I want to buy it right here? No, I want to see it compress. And some of these stocks just run really fast. You're not going to get a lot of opportunity. If you want to trade this shorter term, maybe you go to like an hourly chart. Okay? And if you went to an hourly chart, you see, look at how clear this was over here. Can you see it? See that breakout pattern over here? It came in, it's absorbing, it's tightening, it's shallowing up, really nice, breaks into new highs, buy it in there, and you get this nice quick burst. And obviously, if you're trading an hourly chart, you're looking for stocks to hold for a couple of days or a couple of weeks. If you're trading a monthly or a daily chart, you're looking for stocks to hold for a few weeks to a couple of months. If you're trading a weekly chart, you're looking for stocks to hold for a couple of months to potentially a year. And so you just adjust your time frame accordingly. NXT, this one worked out really well. And we covered this trade back here last month, 2 months ago, excuse me. But you can see the pattern, see how it shallowed, and see how it went from making these 20% drops and a 22% drop. And then for a whole month, it stayed in this nice, tight little 8% range. See how it couldn't get above 70 for weeks in here. And then it finally does. It breaks out in this nice high volume candle. That's your entry. And it goes up 60% in 7 weeks. And some of you say, well, it's going down now, Ross. I know it's going down now. But if I bought it here, and I took some profits in here, and I took some in here, or maybe I just put a stop loss in here and got out of my final position there, you're not going to get the tippy top, but hell, you made 35% in 2 months. Perfect. Go on to the next one. Portfolio managers would kill to find a stock that goes up 35% in a year. You do it in a couple of weeks. Can you use ChatGPT to create the list, import to trading view? I'm sure you can. Yeah, just give it some kind of command like, provide the top 20 stocks in blank sector by market, whatever. Tell it to go search the iClean ETF and make you a list. Sure, it does all kinds of fun stuff. Now, the market is weakening here. So, on a down day, you may see fewer of these opportunities. But is all this making sense to everybody? And again, you don't need a massive amount of indicators. You know where to focus. This is the image I sent to my analysts yesterday and said, guys, study this chart. This is what we saw. This was the Bitcoin. Big sell-off on high. Look at the high volume days. When there's a ton of trading, is it going up or going down? Really, really simple. And look at the high volume days. One is a big liquidation day. The next is when it broke through that support, made new lows. Another high volume day here is a rejection. It opened up and closed at the low. Then it breaks through, made new lows for the month on high volume. And the next high volume, it made new lows for the year. Like it's just really, really obvious. And it's not in anything proprietary or technical or secret. It's just learning to interpret the market instead of predict it. This was Green Plains. Now, Green Plains looks like it wants to set up to go higher. So look what we're seeing here. We had the nice breakout here at 6. It went to 12. Heck of a run. It doubled. Now what's it doing? Let's just shrink this chart down. What do we think this thing's going to do? Well, it looks to me, and again, it's still early. I wouldn't buy it yet. But it looks to me like it's trying to shallow and absorb the supply. And if it comes in and just does this for a couple of weeks and breaks out here around Christmas, I'm all over this thing because it's probably going to go up 50 to 100% again. All right, let me answer some questions here because I've totally ignored you guys for 50 minutes. I apologize. And by the way, if you haven't already, click that link, tradewithross.com. Join us for an entire year. It's the cheapest membership we have. It's our entry-level membership, but we give you these live mentoring sessions twice a week. I'll give you access to this market industry strength indicators. You know where to focus. We put out some trade ideas once a month or so. We have other live events, tons and tons of value here. It's $5 freaking. Join us. I encourage you. Okay, Trump is now requiring bureaucrats to end 10 regulations for every new one. Love that. What about AST? Is that AST Space Mobile? All right. What do we see in AST Space Mobile? Let's crowdsource this analysis. Who wants to buy this stock here? I do not. Why? Because it's down 43% in a month. If there were institutions buying, if there was consistent buying support, it would not fall 43% in a month. It would fall 15 or 20, and they'd scoop it up and drive it higher. So to me, it's not the one. Now, listen, as I say this, don't interpret anything I say as it's going lower. It's definitely going to crash. It's not what I'm saying. Like if there's a reason you believe in this stock, maybe this is a low. It's totally possible it shoots up from here and they report huge earnings or some big deal or whatever. But like, are the odds in our favor here? No, not really. I mean, compare that to here. So it's good up and up, and then boom, nice and tight and shallows up here. Notice there's low volume on the pullback. There's higher volume on the pushes higher. It pushes out here on above average volume. See this? See how the volume was up when it was going up? And then there's pockets of low volume on the retracements, moves up as it goes up, pockets of lower volume on the pushes back. That's what you want to see. And that's what I get in. Now, would I buy it at 60, ride it to 100 and all the way back down? Not a chance in hell. I'd have been out of this stock in here. And I'd have walked away and taken my little 30% gain in 3 weeks and looked for a new one. That's all we're trying to do. When you say you want to see the supply out of the way, you mean you want to see shorter red volume candles along the way? Well, yes, that's part of it, but I just like big picture, I want to see the sellers getting out of the way. And I want to see signs that we're absorbing those sellers. So like in one of these, let's take like an SMR or something. Good examples. You know, do you see how it's falling, big drops, and then a bit of a less drop, and then a shallower drop, and then a shallower drop, and then just nice and tight. See how it's compressing? See how it's getting tighter? That's what I mean by absorbing the supply. Just the fact that the drops are becoming less and less show me there's fewer and fewer sellers with each wave. And again, we got to get the sellers out of the way to have freedom to go higher. What do you think about Chaz put on some of the hot runners? All right, let's take a look at them. SMR's in full-on capitulation mode. I have no interest in it. It's been one of my favorite stocks for 2 years. And you can see why. The thing went from $1 to $60. But it's clearly in capitulation. Look at a weekly chart. Look at that big drop. We'll go to log scale to even this thing out. But look at that, a 30% drop in a week, another 26% last week. It's down another 6% this week. That stock is not being bought. It's being sold. And my suspicion is what's happening, and this is just from looking at the charts, that the nuclear play is fading out. These stocks, is nuclear a great solution? Absolutely. But folks, you're talking about these companies that are surviving on a hope and a prayer with no revenue that have gone from $2 a share to $60. It's all priced in. The institutions are selling. Look at the volume. Look at these. I mean, three of the highest volume weeks we've had in 2 years were on big drops. That's capitulation. So I'm no longer interested in the stocks. I date these things. I don't marry them. All right. IonQ, another big quantum stock. I can see the breakout pattern we had here. This is a weekly chart. Let's go to a daily. Now, this looked really good. It was a nice breakout here. I mean, this doesn't look like that much in hindsight, but that's 50% in 11 days. So it's 75% in a month. Now it's rolled down. It retests. It rejected it, and it's going lower. This is what's known as an egg, all right? When a stock drops, it is going to either be a tennis ball or an egg. A tennis ball drops and bounces. There's big sellers, and the big buyers stepped right in and drove the thing back up. That's good. That's what you want to see. It's a natural reaction. It shows they're buying. An egg falls and splats. And so this stock that was trading at $85 4 weeks ago goes to 60 and still nobody wants it. It goes to 50 and nobody wants it. It goes to 45 and nobody seems to want it. It is splatting. It is an egg. Sell your eggs, buy the tennis balls. Okay? Just supply and demand. We are just interpreting what we see on the chart. There's no double super secret squeeze indicator. There's no proprietary trend analysis. We're just letting the chart speak to us. QUBT, the other big quantum play. Here is our breakout. Beautiful move. And now it's been absolutely miserable. Now, if you bought this stock over here in May and you held it 6 months, you're at break even. If you bought it here in May, sold some into strength, got stopped out in here, you made what? Somewhere in the 50 to 70% range. You then waited till it set up again. You bought it again on the breakout, sold some on the exaggeration blow off top here. It made a new high, then broke down and can't make a new high. Maybe you got out of the rest here. Okay, fine. Then you made another, 20 to 30% on this part. So you've made 100% on this stock. You're out sitting in cash. You don't care that it's falling. And the diamond hands, wannabe fanboys don't know how to play the market, have seen all their gains get eviscerated. It's tactical investing. It is trading, but it is both. Makes sense? And you're not wrong, John. They haven't. And he says, new SMR has never sold a single reactor. He's long puts. He's betting on it to go lower. Now, I don't necessarily care that much about the sales and the revenue because I know how this market runs. It is on news. A good story will drive it. The story made sense. AI is popping off globally. It's not going to slow down. They need massive amounts of power they don't have. They're going to need some kind of solution. Here comes SMR, like a knight in shining armor with their small modular reactors. They can set up on next to they can build these things in a couple of months next to your data center. They'll give you enough power. It's clean. It's renewable. Great story. This is going to be the future. But it all gets priced in early. So ride it until she bucks you and then get off. Is Cameco still good? CCJ. It needs to bounce here. This is where we bought it back in May at 46. Notice it came in, put another little pattern, broke out again. It runs up, a little retest, and look, tennis ball, bounces right off that level immediately. Gaps down to 80, closes the day at 85, and pushes higher. Great. Gap, run, uh-oh. So far, these retests have resulted in stock going higher. But look what's happening. Widening, right? This was tightening. See the difference? So if you wanted to take a stab at this thing, yeah, I'd do it here. I'd risk, it's not an ideal setup for a breakout, but it's at the danger zone. So you could risk, I'd call it about 8%. I'd put a stop at $75. It should not go below there. You can really probably just risk 4 or 5%. And if you're wrong, you'll lose 5 or 8%. If you're right, it's going to push back up and you'll make 30 or 40. But is it telling me it's setting up to go higher? No, it's a tactical trade. Can the SQQQ options be used as cheap insurance against extreme market fluctuations of a market meltdown? Yes and no. I mean, they will do the trick. Options on an ultra short, you're going to pay a lot for them. So if it just melts down, it'll pay, yes. But if you put 5% of your account into these, you got to make another 5 to just hold what you got. Will we consider taking puts on these stocks? Yeah, I'm sorry, John. Yeah, I think so. I mean, it's just, you want to do it tactfully. Like, let's take an SMR, for example. Okay, where is the support in SMR? Just draw a freaking line. Right around in here, right? So what I would have been trying to do, it's breaking it. It's definitely going lower. If we get a little short-term bounce, I'd want to buy or put if I can short it right in here. I'm trying to be tactical with my entries and exits. It's up to you if you just want to hop in a put and ride it lower. Okay, scrambled eggs. It's funny. Is NKTR possibly a fire trade? Let's see. Yep, although it's taken a while. Now, it's a really pretty breakout. Really pretty breakout. And I know it's like, oh, yeah, sure. Woulda, shoulda, coulda, Ross. I know. I'm not trying to say I bought this, but it's like you need to just see so many of these. You burn it into your brain that when you see one pop, you know it's time to buy. But it's kind of running out of steam. Hi, made a new low. It's just kind of chomping in here. For a fire, we like to see it just stay tight for a few weeks and then run. OKLO may come back when they reintroduce their small modular reactor. It may. But the odds are, well, you got a stock currently in stage 4. What did I tell you? They usually fall in stage 4, 50 to 80%. It's down 52%. So if it fell the full 80, which is typical, it could come down here to call it 30-ish. And then it's going to go quiet, and it's going to form a new stage 1, and it's going to base out and absorb the supply. And eventually it's going to get back on its horse and run higher. That's when I want to buy it. Well, Laura, we covered it. I said, where do we know where money's flowing right now? Well, we just keep an eye on the leading stocks. And clearly the theme right now is power. We're seeing some movement in pharmaceuticals slowly, but lithium and natural gas and energy and clean energy and solar and nuclear. So if you just want to buy a couple of ETFs, just buy ICLN. That's the clean energy ETF. Now, it's pulled back a little bit here with everything else. Obviously, if we get a full-on bear market, everything's going to be, we have bigger problems than that. But this has been in a great uptrend. And if I compare this, just the NASDAQ index, from the April lows, whoops, how do I line these things up? There we go. So NASDAQ's up 33%. This is up 50. It is leading. It's growing faster than the market. And you look, it was pretty much just riding with the market. And then about 7 weeks ago, it started to accelerate. It is outpacing the market. This is when the big institutions started loading up on clean energy stocks. The nuclear trade got long in the tooth. They started buying solar and geothermal and natural gas, and it's accelerating. Don't overcomplicate it. VTYX, yeah, looks great. It's a mountainous move, and look, it's gone from $3 to $9. It's a triple, folks, in a couple of weeks. Is it falling? Are we seeing big sell-offs? No, it is tightening. They're holding up here. So, you may get a shot for another breakout here and let this thing keep running. Looks very good. So even though nuclear is down, you're still strong on nuclear for retirement portfolio. Yes, because with the retirement portfolio, I'm just buying stuff I can hold for a few years. And so what we're doing here is getting really tactical, right? I mean, you look at OKLO, one of these nuclear stocks, like it's gotten beaten to death over the last month. But over the last year, it's up 1,700%. So like Let's just go to logarithmic scale so you can see. So, you're going to get this stuff. If you're trying to hold something for 2, 3, 4 years, you're going to catch these bigger picture swings. So I just look at like weekly charts or even monthly charts sometimes. And I did that video to lay out, but when you look at a monthly chart, it still looks pretty strong, doesn't it? A monthly chart in logarithmic scale. Now that's pretty ugly. But again, log scale is going to even out the percentages. So, if you bought it anywhere in here, you'd still be holding. So again, it's the same process, just different time frames. That's all. FOMO is your worst enemy. That it is, my friend. All right. Somebody said I held UEC for too long. Let's take a look, Pat. Yep, you did. Okay. Now, where should you have gotten out of UEC? And folks, listen, this is a tough reality, but if you're going to buy stocks that can go up 50 and 100 and 500% in a year, heads up, they can cut you in the other direction as well. Because when the market goes risk off, when these funds decide they want to reduce their exposure, guess what they're cutting first when they're scared of the economy? The stocks they're up 1,000% on, okay? So those have like, everyone who bought this at $4 and $5 and $6 and $7 and $8 are up 2, 3, 400%. When this thing starts rolling, they're going to get out, right? And that's going to create a domino effect. If you're up 500%, the next day you're up 400, then 350, then 300, then 2. Eventually you're going to screw it. I want out. I'm not letting this go away. That's why you get the domino effect of selling. That's why stocks take these stairs up and the elevator down, because that selling is contagious and nobody wants to lose their big gain. So where should we have sold this? So my thought would be, there's two ways to do it. You can look at just a very basic trend line. Again, I do this in a logarithmic scale to kind of smooth that out. So, somewhere in there, as it broke down, I'd have probably been considering getting out of at least half of it in there. Another way you can look at this is just through clear support and resistance, right? There's a ton of support right there. All September, October, bounced, new high, bounced, rejected up, it bounced, holding, then it broke through. So at worst, I would have been out of this thing here at about $12 a share. You're not going to always hold the tippy top, but what I like to do is sell into strength. And so when you get up 30% in a week, sell a little bit. If you're up 50+% your first month, sell a little bit. Not say all of it, because you want to hold some for the ride, but don't look a gift horse in the mouth. There is nothing wrong with taking a 50% profit in a month and saying, oh man, it went on and went up 100%. Okay. Are you sad you're only up 50%? Like you're not going to get the top. What broker do you typically use? So I've been trying out this new broker, Mumu. I actually kind of like it. I've actually got it linked here. I just put in like 10 grand, I think, to test this thing out, but you can link it with TradingView. Up and down a little bit on that gold we bought last week. And you can just trade right through here. And so it's nice. It's pretty easy. You just come in and hit buy and sell. And you can see I can move my stop loss or adjust it. We bought a little bit in here. We'll see. It's pretty much flat, but I'm very bullish on gold. You can see the breakout. And you'll see a ton of these breakouts. In fact, if you go back and look at the last couple of years. And look over here how it tightened up. Look over here how that thing tightened up and compressed. I mean, just clear as day. Big run, shallowing, 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 breakout. Over and over again. So, yeah, they have a link. I think they actually contacted me. It's kind of cool. They've got a link here, and there's a couple of bonuses. If y'all are interested in that, I'll put it in here. They've got, like, I think it's... There's a cash bonus, but how much you put in. There's like there's a short term. Why won't this paste work? There's a current 8.1% yield the first 90 days. A couple of bonuses there. So if you're looking for a broker, I mean, try them out. But any of them work. Fidelity and Schwab and E-Trade and all the other big houses. So if one is still in UEC, sell and take a big loss or average it out. Well, depends where you bought it. I would just take the hit and learn my lesson and move on personally. Because if you're not sure, sell half. And this goes both directions. You're up big, not sure if you should sell it, sell half. If it keeps going, you'll be glad you only sold half. If this thing rolls over and goes to 6, you'll be, thank God, at least I sold half when it was at 11. So that's my thought process on that. Thoughts on NVIDIA. Again, I'm not big into buying $5 trillion companies at the top, but NVIDIA looked like it could run again. And we had this set up here after and you see it here, right? The big run up coming in, it begins to shallow and tighten up and makes new highs. Great little retest, but look at the tennis ball action, bounced into new highs. Now it's rolling over again. Now it failed to make a new high and it's back at the lows. So NVIDIA to me looks like it's trying to roll over. Now, if I owned this stock, I would not let it get below, call it 175. If it gets below that area, I'd be out of this thing. Now, it's had a heck of a run, folks. This thing went from a split adjusted price of $11 3 years ago to $180. It's up 15-fold. The big opportunity, and again, maybe this is the kind of stock you like, and that's fine if you're looking for big mega cap safe stuff. But if you're trying to do what I'm showing you today, and you're trying to target stocks that can move 30 and 50 and 80% in over a month or two, $5 trillion companies aren't where you want to look. Okay, it's a big girl. It would take a massive amount of buying to send that thing on a monumental move. So the other thing, it's just a crowded trade. I mean, everyone from Jamie Dimon to your Uber driver knows NVIDIA is the big AI stock. Everybody wants it's got it. There's no explosive news that's going to come out that can be any better than the Cinderella story we've seen over the last 3 years. Opinion on Maine. Let's take a look. Give me some stocks. We'll do a little rapid fire here. By the way, those joining us, if you're watching live, please hit that link below. We have a special YouTube offer for you guys. It's just $5 for the entire year. TradeWithRoss.com. We do live sessions every Monday. We do another members-only one over Zoom every Thursday with other analysts. We put out some investment advice. I do a lot, an email newsletter every Friday where I share my thoughts on the market or a hot sector or stock. Last Friday, I laid out my entire investment portfolio with percentages and tickers. You also have access to our support team, get access to these industry strength indicators. You could keep abreast of where the strength is in the market. And again, it's $5 for an entire year. No strings. And if you're not happy in 364 days, call me. I'll give you your freaking $5 back, right? It's no big deal. Just our way to try to help, okay? Do you set your stop loss percentages in your retirement the same as your trading? No, Mike. In fact, I don't use stop losses in my retirement account because, again, it's very well diverse. Look, if I had half my retirement account in a single stock, absolutely I would, okay? But this is how I'm currently set up in that account. Let me see if I can find it. Did I delete that? Let me pull this up. Hold on. All right. This is how I've got it set up. And this is just mine. I'm not telling you to do this. Just this is how I'm setting up currently. So I've got 40% to broad-based equities bucket with the Vanguard, the S&P 500, the value stocks, the mid caps, the emerging markets. I've got 25% allocated to the energy sector, and that's split between renewables like nuclear, solar, and the iClean, and oil and gas with the midstream, natural gas, the broad energy fund. I have another 25% into metals, a big play on the inflation. It's going to get worse for the next couple of years, mark my words. And that's between gold and silver and palladium and the mining stocks and copper and lithium and steel. And each one, like 3% of my money is in the lithium and batteries ETF. That ETF holds 50 different stocks. So I don't really have any single stock risk. I've got another 10% in just real assets and infrastructure. So like PAVE, the farmland ETF, the commodities ETF. So, when you're talking about 3%, 4% of your account into an ETF that holds 40 or 50 different stocks, you don't really need a stop loss. So diversification does the job. With what I'm showing you here, we're trying to be tactful. We're trying to get in quickly. We're trying to make a nice, big, quick hit and move on to the next one. And I don't want to take a lot of risk with that. So for those, I'm using stop losses. Main Street Capital. I mean, I don't like it. It's falling and it can't get up, right? This, to me, looks like an egg. So it looks like it wants to go lower. And here's the best way to know if you should get out of a stock. Flip the chart upside down. In TradingView, if you right-click over here in the price panel and hit invert scale, you've got this. Now, if this was what the chart actually looked like, I'd tell you, oh, this is going to be a monster. Big move up. Nice consolidation. Got a little loose in here, but it's coming right back up. And little tightening. I want to buy this on a breakout, right? But this is not the chart of Maine. This is the upside down chart of Maine. So what does that mean? It means it's probably setting up to go lower. So I'm not a fan of it here for those reasons. Again, if you're biased on a fundamental reason, you believe in a long-term future, ignore what I'm saying. I'm just trying to predict the next 2 to 8 weeks of this thing. Same thing, Casey. Yep, same thing. Took a major hit in UEC options, lost $150, better than loss would have taken. Yeah, 100% true, Jack. Good job. Thank you, Sean. Core Weave. Let's see. I'm going to do a little rapid fire here. Core Weave looks hideous. This thing's falling off a cliff. It's down 50% in a month. The money is leaving this. Again, the AI trade is just long in the tooth. This is stage 4 action. This is liquidation. At least stage 3. Roku. Yeah, it's not terrible. It's not breaking down yet. Really needs to hold this kind of $90 support level. It was looking good. I think this is likely just due to overall market weakness. And the reason it doesn't quite scare me yet is the volume. So it is pulling back, but notice how volume is a little bit light. It's not like big, giant, red, high volume selling days. So this to me just looks like overall market weakness bringing everything down. It wouldn't panic me yet in this. AMD. Yeah, same story. Doing really, really well. It's pulling back in here. Must be having an ugly day in the indexes, but look at the volume. It's not anything to scare me yet. But I think there's better places to put your money personally. Prime Medicine, no thank you. MAGN, absolutely not. AROC, yeah, we have some insider buying here. Just technically it doesn't look great, and it is beginning to roll over here. If I lost 80% in a stock, should I sell it or wait and hope for it to come back? This is why we don't want to get that situation. Give me the ticker. We'll take a look at it. Dino looks wonderful. I know what you get. Who put this in? Scott, I guarantee you get the emails from barchart.com, right? There you got this from. This is the stock they mentioned yesterday in that. Maybe not. But yeah, it looks wonderful. This looks great. Big move up. Nice little shallowing base, tightening in here. Breaks out again. It's just in kind of this flat base. But notice it is beginning to tighten up and shallow in here. So yeah, it looks really good. Looks great. Now, you might ask, what does Dino do? Well, it's an oil company. It is an energy play. That's the area showing the most strength because a lot of these stocks, like Sinclair, look, everyone forgot to tell Sinclair the market's rolling over. All right? The market's down the last 3 or 4 weeks. This stock's within 1% of its all-time highs. So, yeah, it looks wonderful. It looks great. Palantir, nope. You see the breakout? It failed. I'll give it a retest, but I'm not going to let it come all the way back down here in the base, especially not break below the base. So this thing is not working. In fact, I use this as my indicator. It might be a short-term top. I did a video this day on November the 5th. It beat earnings. It beat sales. It raised guidance, and the stock's rolling over. That is a sign of topping action. Even market-beating numbers cannot send the stock higher. Yeah, we got a little blood on the street today. S&P down 1.5%, NASDAQ down 1.5%, Dow down 1.5%. The equal weighted index not down as bad. Now, what can you learn from that? RSP is the equal weight ETF. SPY is the market cap weighted. This one's down 1.1%. This one's down 0.4. Why? Because in the S&P and the NASDAQ, the market cap weighted, the big stocks carry more weight. Look at this. There are 10 stocks. Now, the S&P 500 is the 500 largest stocks in the U.S. market, okay? But when you buy that index, 10 stocks represent 40% of that index. NVIDIA alone is 8% of it. So guess what happens if Apple, NVIDIA, Microsoft, and Alphabet go down? The whole other 496 go right down there with it. So this is being led by the big mega cap names. And the pullback is because NVIDIA is going down. Apple's not. Palantir and Microsoft, like they're a big chunk of this index. And that is driving everything down with it. All right, getting just about out of time here. Let me answer a couple more questions before we go. By the way, if you haven't already, click that link below. Sign up, tradewithross.com, $5 for an entire year. Live sessions twice a week for a year. Access to our industry strength indicator for the year. Access to our support team. Trade picks, my weekly newsletter, all of it, $5. Can't give you any more for $5 without going broke. I reinvest dividends, James, but it's up to you. Biohaven and MYGN, let's take a look. Oh, that's not good. Now you can see what we were looking for. You can see it was coming in, trying to form that stage one. And then, that's not good. That's down 50% in a week. Avoid. MGNY. What was the other one? MYGN. Yep, that one didn't break out either. You can see the same pattern here, but then news came and shocked to the downside. But PLMR in May that has flopped. Yeah, sure did. This was a pretty clean, just trend line break. It then broke, this little support level in here. Should have been out of this stock for all of it, back here to 150. Now, that being said, looking at a new trade, well, it's trying. It's getting a little squirrely in here, but it's kind of trying to form this rounded bottom and push back up. So hopefully it'll get back up here. But I would ride this thing all the way down. IREN. Okay. There's the breakout in June. Talk about fruitful. Gave you a 600% gain. Now what's happening? Well, it's starting to roll over. Hopefully it bounces here. Really needs to hold in this area, and you just want to see, is there any kind of support resistance zone? To see it was stalling here for a week, see how it bounced in here. It really needs to bounce here. If not, I'd be out of it if it comes down below this area. ASST. Not a chance in hell. MRVL. Nope, rolling. Insiders are buying it. It's got a nice little trend there. I'd take that back. It could hold right in this area here, but we really need to see some bouncing pretty quickly. Albemarle. Beautiful. I think we recommended watching this for a breakout above 90, and you can see why. Now, what does Albemarle do? Well, it's a big mining company. What's the main thing they mine, Ross? That would be lithium. Why does the name lithium sound familiar? Oh, that's right. It's the leading group over the last 1, 2, 3, and 6 months. You see how this stuff comes together? So you got a strong market, you got a leading group, you got a big stock in that group, you got the breakout pattern. Buy the darn thing when it breaks out. I promise you will do better as an investor. I guarantee it. Okay, I can't guarantee it. I think it's against some kind of rule, but I would bet everything I have on it. It's really just A plus B equals C. The odds are in your favor. Press. Risk 8, 10% each time. If you're losing 7 or 8 or 10 when you're wrong and you're making 40 or 50 or 100 when you're right, you're going to do very, very well. You can do this. Anyone in here can do this. There's nothing complex about this. If you pass third grade math and you know what a stock is, you can make money at this. Just got to use some common sense, and you have to be able to sit out when conditions are bad. Philip, with the dividends, yeah, I mean, I'm not a big dividend investor. Like I was just talking about my retirement account. I can't pull those out, so I just put them back in there instead of taking a withdrawal. I don't know what this is, but it sure is ripping. Medical specialties. Now, this is a great example. Like this is the needle in a haystack play. Okay, this is a little, let's see what they do. New cancer subtypes and commercializing diagnostic tests to improve clinical outcomes. I don't even understand what they do, but they're a medical testing company. Right now, is medical testing a leading group? No. Is anything in the healthcare space leading? No. But this stock did. You might say, well, Ross, that goes against what you said. No, it doesn't. There's going to be some of these that do great. But if you want to put the odds in your favor, if you want to fish from a stocked pond, you want to go to a target-rich environment, stick to the areas leading the market. That's where the odds are in your favor. ACLX looks great. Now, look over here in the bottom right. See that biotechnology? It's a biotech stock. Would I be willing to look into biotech stocks? Yeah. Yeah, biotech's very strong. So, yeah, this is great. And it's perfect. It's absolutely perfect. Look at the move here. Just picture perfect action, okay? Big drop. This thing got murdered from $100 down to 50. And then it comes in, it shallows, it puts in what we call a rounded bottom, compresses nicely, breaks out here. Nice little run from 75 to 95. And what's it doing now? Same thing. Tightening up and shallowing out. And so if it breaks out here above 94, 93, whatever, right in here, I would buy it looking for an acceleration higher. I've got a beautifully trading stock in one of the leading groups in the market. Its price action is tightening, not widening, right? Perfect, perfect, perfect. Yes, thank you for this. Who gave me this? Joe, you're a stud, sir. Gold star for the day. All right. Last one, Encore. No, it looks absolutely hideous. It is rolling over, being taken out of the woodshed, beaten severely. It's down 40% in a month. No, thank you. All right, that's our session. I hope you guys learned a lot from this. Went a little bit over the typical hour, but you had a lot of great questions. I want to cover these. If you're watching this recording, feel free to put your questions, comments below this video. They do pop up on my phone. I do my best to answer all of them as they come up. So if you saw something I was unclear on or you had a question, please answer. I promise to get back to you. And if you haven't already, click that link, tradewithross.com. You can join us for an entire year, $5. $5, not per month, for the year. Won't even auto-renew, I don't think. So $5, weekly mentoring sessions, trade ideas, access to our indicators, my weekly newsletter, our support team. Let me just tell you, we lose money on this. Trust me. Okay, I got 2 analysts, 4 full-time support. We lose money on these, but it's a great way to help people get you in the fold. And if you want to take your trading to another level, if you want some more assistance, you want to get our active buy and sell lists and be notified when we're getting in and when we're getting out and what to watch, et cetera. We do have some premium memberships that cost a little more because they cost us a ton of money to run and operate, but if you're interested in that, we'll let you know about those as well. But click the link, tradewithross.com. I look forward to working with you over the next year, and if I can be of support in any way, please let us know. That's what we're here for, okay? So thank you all again. I'll see you next week, same time, same place. And until then, just try to follow what I've shown you here. Stick to leading groups in strong markets. Look for these breakout patterns or pullbacks of support. Keep your risk at 8, 10% on these. So if you're wrong, it's not a big hit. And I can just about guarantee you will see your results improve along with it. Okay. Thanks, guys. Have a great rest of your week.